Investing can feel overwhelming, especially when you're just starting out. But what if I told you there's a way to build wealth over time without picking individual stocks or spending hours analyzing the market? Enter ETFs, one of the simplest yet most powerful investment tools for new investors. Exchange-traded funds, or ETFs, are like the Swiss Army knife of investing. They offer diversification, low costs, and flexibility. But how do they work? And more importantly, how can you use them to start growing your wealth today? Stick around, because by the end of this video, you'll have a clear roadmap for getting started with ETFs, even if you've never invested before. Before we dive in, remember, this video is for educational purposes only. Investing comes with risks, so be sure to do your own research or consult a financial professional for personalized advice. Let's break it down. An ETF is essentially a basket of investments, stocks, bonds, commodities, wrapped into a single fund that you can buy and sell on the stock market, just like a stock. The biggest advantage? Instant diversification. Instead of putting all your money into one company and hoping it performs well, an ETF spreads your investment across multiple assets, reducing your overall risk. Take the S&P 500 ETF, for example. When you invest in one share of this ETF, you're actually investing in 500 of the largest US stock companies at once. That means if one company underperforms, it's balanced out by the others, making it a safer bet for beginners compared to picking individual stocks. Now let's talk about costs. ETFs are known for their low expense ratios, which is the fee you pay for the fund's management. While mutual funds often charge 1% or more in fees, many ETFs cost less than 0.1%. That might not seem like a big deal, but over time, high fees can eat into your returns. Keeping costs low is crucial for long-term growth. But here's where ETFs truly shine: flexibility. Unlike mutual funds, which only trade at the end of the day, ETFs trade throughout the day at market prices. That means you can buy and sell them whenever the market is open, giving you full control over your investments. So how do you get started? First, you'll need a brokerage account. Platforms like Vanguard, Fidelity, and Charles Schwab offer commission-free trading on ETFs, making it easy for beginners to invest without extra costs. Once your account is set up, it's time to choose your ETFs. For new investors, broad market ETFs are a great place to start. The Vanguard Total Stock Market ETF, VTI, gives you exposure to the entire US stock market, while the iShares Core S&P 500 ETF, IVV, focuses on the 500 largest companies. If you want international exposure, consider the Vanguard FTSE All-World ex-US ETF, VE, which includes stocks from around the globe. Now, let's talk about strategy. Should you invest a lump sum or contribute consistently over time? Many successful investors use dollar-cost averaging, investing a fixed amount regularly, regardless of market conditions. This approach helps smooth out market volatility and reduces the risk of making poor timing decisions. For example, let's say Liam wants to invest in ETFs, but is worried about market fluctuations. Instead of dumping all his savings in at once, he invests $200 every month into an S&P 500 ETF. Some months, the market is up, and other months it's down. But over time, he benefits from long-term growth without the stress of timing the market. And what about taxes? In the US, ETFs are generally more tax efficient than mutual funds due to their unique structure. They allow investors to avoid capital gains taxes that often come with mutual fund distributions. However, if you sell an ETF for a profit, you'll still owe capital gains tax. So holding for the long term is usually the smartest move. By now, you should have a solid understanding of what ETFs are and how they can help you build wealth. The key takeaway? ETFs offer diversification, low costs, and flexibility, making them an excellent choice for beginners. What's the first step you'll take toward investing in ETFs? Let us know in the comments. If you found this helpful, why not tap that subscribe button and turn on notifications so you don't miss out on more ways to grow your financial future. And if you're looking for more ways to strengthen your investment strategy, we think you'll find the next video on screen valuable. See you there.